It's a beautiful day. Don't let it get away. Hey, good morning. Where are you? Hey, I was just making coffee. Guten Morgen. Yeah. How are you? Happy Monday. Just want to pop the chat here. Guess I have to pause. There we go. All right, cool. So welcome. Happy Monday. It's going to be a good trading day today. Osamu's on fire. Cool. Good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Good to see you. My name is Wayne. Very serious. Yeah, very, very serious. Actually, we got a lot going on. It's going to be a busy week, a short week. There is a holiday in the United States of America. Cool. So anyways, we can cover all of that. Let me know what you want to do in the chat. Type in the most concerning asset that you would like me to cover today. Just type in one. If you look at the description below today's video, and by the way, thank you for clicking the thumbs up button. I appreciate that. Tells YouTube this is quality content. If you look at the description below the video, you'll see that there's a link to tradersway.com, a trustworthy and ethical foreign exchange broker. There's a link to 88 hours of training videos for a whopping $88. There's a free 90-minute lecture on risk reward when trading the stock market. There's a link to tradeplans.ai so you can get personal feedback on your technical analysis. There's a free 90-minute lecture on fundamental analysis. There's a link to my book. There's a link to a free Forex trading course. I mean, that's a lot, dude. That's a lot, right? Some of those cost money. Most of them are free. I want to point you to those resources. They're pretty good. Yeah, the price just right. So again, you need a broker. I recommend tradersway.com. You should check them out. The trading platform I use, is Tradersway. And all these chart templates and indicators, they're all available as part of your $88 annual membership at Investor Bootcamp. Yeah, it's included. Yeah. Now, the thing that I'm interested in is, oil is one of them. We had this as a line in the sand, if you recall. This area around 72. I have it as 72.50. This area, 72.50. And then there was, the next one was like 65. Like it was a long way down, 67, 65, 67, somewhere in there. Like, wowzer. And so our line in the sand, 72.5, I got from this level. And it held tickety-boo. Peekaboo, I see you. Okay. Yeah. Now it's on the move. Oh my God. Well, this sucks for, the ECB. The ECB was telling us how great everything is in Europe. Inflation dropped to 2.9% in Europe. When you looked at the facts, however, because it is true, inflation dropped from 5 to 3. But in one report, like that's crazy fast. And then when you break down all the subcomponents of their disinflationary result, you find out that only one thing had falling prices and everything else had rising prices. In fact, significantly rising. 3%, 4%, 5%. So how could they have inflation drop from 5 to 3? How is that possible? Well, energy prices dropped 12%. Now, I think the United States is in the same boat. Everything is right as rain. Well, if inflation is dropped if energy's dropped by 12%, well then, and everything else is stable, then if oil prices return to 90, places like the United States, places like Europe, that show signs of improvement, well, all of that will be shattered and reality will sink in. And what? The Fed might have to hike again. And all this wonderful narrative that's good goes away and we go back to zombie apocalypse. Could happen, you know. It could happen. So right now it's been down, down, down. Okay. And we are approaching a 78.6. Uh-oh. So already, if you're a bull, or let's say if you're a bear, at the very least, you need to sit up and take notice now. This is no joke, bears. Because what technically sets up is something like this. Okay? Or and either way, it's not good for a bear. Okay? And as this has been falling, I've been saying, be prepared. Be prepared. Be careful. The United States is producing a lot of oil. That is true. But we're using every drop. Yeah. Spencer says, hey, inverse head and shoulders. Hey there, boo-boo. You got to get the pips from the pipping basket. Yeah. Yeah, inverse head and shoulders. Oh, faux show. Yeah. Yeah, it could be very important. Or we just go back to doing what we were doing. Okay? And the only thing that occurred really is that the bounce was the velocity of the upward velocity was too quick. So imagine instead it went up more slowly, and by the time this came down, that was supposed to be red. There we go. Okay, once this comes down, then what? Well, then it wouldn't have been so alarming because we would have stayed below the 618. So the thing is, it's now somewhere between 1 and 2 standard deviations of the mean, but the velocity was too great. So if it hits it at 786, 786 very often isn't a retracement, but a reversal. If you don't believe me, it's in my book from 2008. It's a long time ago. So it's either an issue of velocity, too far, too fast, okay, or we got ourselves a full-on reversal. And the full-on reversal of oil prices going up, economically speaking, is super ridiculously important. Okay, what fundamentals support that, boss? Well, we don't have any oil in supply. Okay. We don't have any in supply. So we only need one bad thing to happen, and we're in a world hurt. Do I consider pennants and triangles and wedges for predicting price action direction? No. No, I don't. I don't care. The older I got in hell, the more I realized that almost everything we're taught is generally nonsense. So all you need to know truly is price action. And then you layer whatever measurements you find helpful to measuring price action. So like I'm using Fibonacci here, for example. It's helping me measure that we've had a 78.6% retracement. And it just helps me say, ooh, that's a lot. And that's very bad for bearish price action, in particular on the shorter term, like the hour. Okay. So does Fibonacci matter? No, not really. And you're like, but Wayne, you use Fibonacci all the time, and everybody uses Fibonacci, and okay, let's talk about that. Do you believe a tortoise shell grows in the golden ratio? Do you believe a cherry blossom grows in a golden ratio? Do you believe that, I don't know, ants mate? I don't know, what else do they preach? The skin of a sea star. All right, let's get rid of all that nonsense. Okay, you'd have to be a gullah bull or a ninkao poop to believe all that stuff. Okay, if I changed my Fibonacci settings to 25, or how about this? No, let me do it. 33, 50, 66. Would there be any difference at all in my trading? None whatsoever. In fact, if I changed it to 25, 50, 75, it'd probably be about the same as well. The Fibonacci ratios, and the 0, 1, 1, 2, 3, 5, 8, 13, 24, 21, 34, 55, 89, 144, 233, 336, so on and so on. Does it have any meaning, this golden ratio? No. It's all nonsense. All we're trying to say is price action. Okay? Price action. So if you are a bear, you want to sell a lower high. And at some point, the lower high doesn't show up. Just doesn't show up. But most of the time, lower highs do present themselves. And usually they're in a range. A 382 to 618 range? I don't care. 33, 66. How about another one? What else would be good? Like 25.75. How about I like 33.66. 1/3, 2/3. Okay, very simple. So most of the time, somewhere between 1/3 and 2/3 in a downtrend. Okay, price tops out and rolls over. Sell. So what are the key components of this? The key components are you're a bear. Does a wedge help on that? Whatever, believe what you want. Okay? You're either a bull or a bear. Now, you can get that using technical analysis. Great. You can use that doing fundamental analysis. You can do that by flipping a coin. So you might say, well, Wayne, this looks bearish to me. Sweet. So are you a bear? Are you going to sell it? Is that what you want to do? What's your decision? Okay. Now, the next thing is to find your range. If you're a bear, where do you want to sell? And when you're a bear, where do you want to stop selling, right? And I would say most of the time, this is good. Some version of that. And now that we're above your sell zone, again, mine might be 66. Okay? At some point else, I would say, we're not really supposed to be up here if we're a bear. And if we're up here, I mean, it's definitely no longer a retracement. It's a reversal. And I'm sitting here and I don't have a lower high. I can't sell. I don't need anything else. And even this is just a tool. A tool. Okay, so I'll change it right now. Yes, I draw my Fibonacci upside down. I know. It's part of my genius. And then if you want, I'll take this further. If I think 786 is too far, right, then I don't need it. Where did I put it? Wait, the 382 is the... Oh, there it is. I'll kill it. Yeah, that's right. Okay, delete that. All right. So I can have a hard and fast rule. You see this? I can't sell until this rolls over. And now that it's above my 66, remember that's not 618, it's 66. In fact, why don't I show you how to do that? Why not? Do it right, Wayne. Okay? Do it right. 66%. Okay? And then this one is 33%. This one is 50%. Cool. There you go. 66, okay? So if all I did was price action, right? Then I don't need anything else. And Fibonacci just says, this is outside my sell zone. It's too expensive. Okay? I could do this all day, every day, and it would be enough. All the other stuff are sort of additional seasoning to the recipe. Right on, Hal? So yeah, so our pennant's wrong, our triangle's wrong. No. But in the beginning, on Hal, what happens is people try to learn all this crap. And it's probably because, someone goes from one YouTube guru to another YouTube guru to another and another and another. And they all have these, things, their thing. I'm trying to boil it down for you that you just need to know price action. That's it. Now, I also use pivot points. I like them because they're a leading indicator. That's it. So I would say learn price action, and you will begin to understand the other things. If you learn price action on how, then you go back to the idea of pennants and triangles, and maybe you want to do Gartley patterns and bats and rats and animals, right? You start doing all these other things. It'll make sense. My worry is people start memorizing patterns and they don't know how the market works. That's all price action is. Knowing where all the buyers are and where all the sellers are. So you're like, I don't want you memorizing Gartley patterns. Well, I was told that usually when it does this, it goes up. That's a terrible way to trade. Terrible. But later on, when you understand price action, you use these tools just to help you see the price action. So like Fibonacci here, and I've changed them. These are non-Fibonacci settings. It looks expensive to me right now, and I probably don't want to sell. I might sell later if it rolls over and heads down, but there's a high probability that it heads up. And if I'm a bear, it's just not the right price. And maybe later, maybe tomorrow, we find that it makes a higher high today. So let's say it goes all the way here to tomorrow. Well, good thing I didn't sell today. And then what? I'll buy a 33% pullback. Yay! Not a 382, a 33. Okay? Or plan B is have it drop all the way down here, which happens to be the inverse head and shoulders. And I'll buy there, somewhere between the 33 and the 66. Non-Fibonacci numbers. I don't care about Fibonacci. Don't get caught up in all that nonsense. What do I want to do? All right, it's made a higher high. I want to buy a higher low. That's price action. So where's my buy zone? Well, if it rolls over anywhere in here, I'm going to take a shot. Sweet. So all I have now is the simplest form of trading ever. Maybe I want to be a bull, and if so, I buy low. So what's a reasonable price? Well, I don't know, somewhere in here. Cool. Everything else is just more. You don't need more, but if you understand this, then things become helpful. For example, then you start to say, oh, all right, this is an out of position trade, and which led to profit taking. Maybe, right? So you might say, using pivot points, this does make a lot of sense. Sweet. Sweet. I like that. See, to me, I like pivot points. If you sold here, this is your target. Okay, if you hit your target early, you go back to the central pivot point, which we did. Sweet. That makes sense. That makes a lower high. That predicts a lower low. Sweet. So, right, you start threading all these things together. Now, you might say, on this time frame, Wayne, well, then all we need to do is, right, what we're going to do is kind of head up to this area and then continue down. Sweet. That's what a longer-term bear would do. So, are you a bull or are you a bear? I don't know. Well, then you shouldn't trade. Okay? Because part of the market is going to want to do this. Even if you're a bear, you need to know that. Now, notice the down that the bulls want is necessary. They need the bears. So, you have to go all the way back to the fundamentals. Well, what could change this? It's not random. If something happened in the world where suddenly oil supply, it could just be fear. People are suddenly afraid that oil supply does fall. It could be a hurricane. It could be geopolitical risk. It could be whatever. It's just anything. Any supply. Right? Any risk to supply. Oil is going to go up again. Now you have to then thread together the pearls. Not only does that present you a WTI long trade, but what does that mean for the stock market? What does it mean for the Fed? What does it mean for gold? What does it mean for the dollar? What does it mean for the yen? You should be able to string together these pearls. So I'm reading this book on samurai. It's Japanese and Chinese samurai warfare. Learning swordsmanship, actually, specifically. And one of the themes that the book preaches, and by the way, the book was written in 1625, I think it is. One thing they mention a lot, over and over and over, to know one thing is to know 10,000 things. So in hell, what I'm trying to say, if you start like, if you go on a path, and I'm not saying this is you, but this is what typically happens. People go from guru to guru, training course to training course, and they're like, oh, this guy's really successful with Fibonacci. I need to learn Fibonacci. Oh, this other guy's really successful with pivot points. I need to know pivot points. This guy is really successful using, Elliott wave, and I need to know Elliott wave. Why? Because they're successful. And you're learning the 10,000 things, but not one thing. If you boil it down to the price action first and you understand how the market behaves, to know that one thing is to know 10,000 things. Because then you'll start to understand how all these other indicators actually work. And you're like, oh, they're different forms of measurement of price action. Oh, I see, right? The higher high on this time frame sets up a pattern, but then you see the lower high, lower low on the bigger pattern, on the bigger time frame, which would then lead to this other. And you're like, oh, they're different measurements of price action, and maybe price action on multiple times. And all of a sudden, you know all these things. It starts to make sense because you're looking at it through the lens of price action and not all like a pattern predicting the future. I'd rather you know market behavior of why it's created. And the same thing with fundamentals. You could look at 10,000 different things like QuantBox, right? 10,000 things on QuantBox. But what question are you trying to answer? Am I a buyer or a seller? Is money flowing to this asset or away from the asset? Is it risk on? Is it risk off? So to know that is to know 10,000 things. But you don't have to learn 10,000 things. You have to learn how to make a decision. You have to learn how to be connected both technically and fundamentally to reality. Okay? Yeah. A classic example is every 3 months, you flip a coin, risk on or risk off. That's it. That's your decision. You don't know how to make the decision fundamentally. Okay? You don't know how to make that decision technically. It's not your fault. You just don't know. So instead of trading randomly in a market that seems to move random, it doesn't, but it seems to, then you'll never have consistent results. So let me offer you a proposition sort of thing, an idea. Let me offer you an idea. If you're trading as random every day, you might be a bull, you might be a bear. You're random. You just, I don't know, you look at things and you're like, well, the shape of the wedge told me to be a bull. Okay. Your random behavior of buying and selling in a market that may seem to also be random, and with all the different variables and all the different time frames, it can be, then there's no way, it's mathematically impossible for you to have consistent results. You have to buy into that. Your randomness inside the market's randomness is pure chaos. It's absolutely impossible for you to have consistent results. You have to buy into that first. And if you see that, and if you believe it, then you must be willing to accept a change. But if you don't accept that, then everything else I say is sort of irrelevant, right? Okay, if random times random equals random, and you cannot control the market, then all you can do is control your behavior. So if you flipped a coin and for 3 months you were only risk on or only risk off, if you don't know what that means, you need to join Investor Bootcamp. $88 fixes that problem. It's just education. It's not a problem. It's easy. We'll fix that. And once you know it forever. And you don't have to memorize like this, that, and the other thing. No, risk on or risk off. It's pretty straightforward. So if you don't know how to get there, you flip a coin. And you flip a coin and you're risk on for 90 days. What does that mean? Well, there are only certain assets you buy and there's certain assets you only sell. For example, you would only long euro dollar. Now, you've made that decision. Right or wrong is irrelevant. Stop thinking that way. Irrelevant. If you've already concluded that random trading in a random market leads to failure and loss, then give that up. Remove that. It's already been proven false. Get rid of it. Never look at it again. You've already proved it. You know it. It doesn't lead to anything good. Okay? Abort it. Now, moving back to this, you flip a coin, you're only risk on, and you can only buy euro dollar. Now you move over to technical analysis. See, now you know what you're going to do every single day for 90 days in a row. What is it that you do for euro dollar over the next 90 days? Answer the question. If you're risk on, what is it you do with euro dollar every single day for the next 90 days? Type in a question mark if you don't know. Okay, I figured most people would say buy. Not quite. It's not quite right. That's not quite accurate. You look to buy the dip. So you don't know what you're going to do every given day. So what you do is you use all your tools, whatever tools you like. You like RSI? Use RSI. You like stochastics? Use stochastic. You like MACD? Use MACD. You like Elliott wave? Use that. You like Fibonacci? Use that. You like moving averages? Use that. It doesn't even matter. Use no indicators. Use price action only. Do that. You'll be more successful than your random times your random. But you don't buy every day. That's not quite right. You do your technical analysis to identify prices in which you might buy, situations in which you might buy. But you are definitely not a seller, and all the tools you use are to identify what? Is this a higher low? Now, if you flip the coin wrong and you're a buyer in a falling market, you're not going to get a lot of trades for the next 3 months. Okay? It's a lot better than losing money. And once again, we already know the old way is the wrong way. The old way is the dead way. It doesn't exist to you now. And because of your patience and discipline, you might be willing to not trade very much for 3 months because you're a bull in a bearish market. Well, that's the patience and discipline that you need. By not trading, you are actually building positive trading habits. Okay? To know the void is to not know the void. To become a better trader is to not trade. Again, I'm quoting samurai philosophy. To be a master trader is to not trade. What do you mean? How does that make any sense? When your bias is wrong, you don't trade. So what do you do with your time? Why don't you learn fundamentals? Spend 3 months learning fundamentals because you got your bias wrong, son. Why'd you get your bias wrong? You don't know how to have a bias, so you flipped a coin. Can we improve on that? Yes. So now you have time to now focus on that, and you should get better. You might incorporate things like seasonality. Is this a time to be a bull or is this a time to be a bear? And you might use that as a tool now and say, well, this time of year, WTI typically goes up, so I want to be a bull. And you're willing to be a bull. And now every single day you're like, is this a lower high? No. Oh, not interested. Is this a lower high? No. Not interested. Is this a lower high? Yes, I'm interested. Sweet. Good. You might have to wait 3, 4, 5 days for this. Yep. But let me say it again, and I think, I think Greg was referring to something like this earlier in the chat. I don't see it right this second. But this idea that of opening up a demo account, let's say you go to tradersway.com, sign up for an MT4 or an MT5 trading account, right? Get a demo. Great. So now if you're a member of Investor Bootcamp, you download all my chart templates. So now your charts look exactly like my charts. Will that make you rich? No, it won't do anything for you. But also sitting down at your charts, throwing down a bunch of trades will not make you a better trader. That's what everybody else does. And if 95% of retail traders lose all their money, and by the way, 95% of everybody on the planet fails at everything. So, don't do what they do. Okay? And instead, learn the way. Okay? Is a master random or is a master consistent? Then you must recognize what kind of trader you want to become. And then start doing that. The master is the one that's focused and knows what they intend to do before they do it. They don't say, look at this pattern, I guess I'm going to do that now. No. Okay? No. So practice this way. If you don't know how to make an investment decision, I do recommend spending the $88. But even if you don't, if you, let's say the only money you have in the world, you don't have $88, but you have a penny. I will teach you right now how to use a penny to become a master trader. But the thing is, you have to understand what a master trader is. A master of what? Patience, discipline, fortitude. Does the things that other people are just unwilling or incapable of doing, like research, so that they understand the why of the world. They're not just reacting to everything emotionally, but also trading. They're chasing candles and they're chasing patterns and they're chasing gurus. They're chasing false idols. If I can do Forex, I will have a Lamborghini, right? Pretty girls will fall in love with me and laugh at all my jokes. No. Learn how to become a master. So even a master that only has a penny and has a demo account, if you can flip the penny to discern risk on or risk off, you don't know what reality is. We recognize that. If you knew a little bit more about reality, you might be able to say, well, I'm leaning toward risk on or I'm leaning toward risk off. But all of that is irrelevant because nobody knows the future anyways. So you could just admit you don't know. That's fine. But here's what a master can do with a penny. They flip it. And it says from January 1st to April 1st, you can only be risk off. Well, that doesn't sound like a master. Because that coin toss is random. But do you have the patience and the discipline and the fortitude to just trade your risk off? Do you have that level of patience and discipline? Can you develop it? That's what your demo account is for. I traded on a demo account for 2 years. But I didn't just throw down trades, I practiced. Like learning golf by making 100 putts a day. Okay? 10-foot putts, 100 a day. Every day, every day. And it's that kind of focus that makes you a master. Playing a lot of golf does not make you a better golfer. Going to a driving range and just randomly hitting golf balls doesn't teach you anything, probably just reinforces bad habits. Okay? So what makes you a successful trader? Is it having the right tools? You don't need any tools at all. The tools are sort of irrelevant. Okay, they're useful statistical analytical tools. But let me know your thoughts here. Is it possible that someone can be a successful trader trading with a chart only, so you're a technical analyst, and you have no indicators at all? Can you be a success? Are there traders on this planet that could trade completely with no indicators whatsoever? Absolutely, totally, yes. So you don't need any indicators. Should you learn what the indicators do? Well, you can't learn what the indicators do until you know how price behaves. So memorizing what inverted wedge does is irrelevant if you don't know how price moves. It follows the path of least resistance. So now the next thing is, well, what tools will help you decide what the right time and price to buy or sell is? Well, if you don't know if you're a buyer or a seller, then why is that even important to you? Why do you need a MACD if you don't know if you're a buyer or a seller? You see, like, it's wrong. You don't focus on the 10,000 things. It's impossible. You focus on the one thing. Once you understand the one thing, now you actually know 10,000 things. So, what's the next thing? Can you trade profitably not using a chart at all? You never even look at a chart. Are there traders in this world that simply trade based on fundamentals only? No chart at all. Yes or no? Yes, absolutely. Without a shadow of a doubt. So, all you need to know is price action. All you need to know is fundamentals. You don't need to know them at the same time. But if you have no patience and no discipline, no work ethic, and you're incapable of making a decision, can you be a success using technicals? No. Will you be a success fundamentals? No. Will you be a success using a combination? No. Now, Meta says risk management first. Well, look, it's important, right? But like, if you have a poor decision-making process, Meta, it wouldn't save you, right? So I wouldn't say first, but I do agree with you. Later on, it's your decision-making process. And in particular, risk management comes at what people forget is risk management is emotional. Risk management is difficult. And once you're trading real money, you realize that's the one that you lose sleep on all the time. Making money is straightforward. Okay? Making money is straightforward. It's your job. It's what you do. It's like golfers make birdies, golfers make bogeys. They got a lot of pars. It's all part of the game. So like, when a golfer hits a good drive, they're like, yeah, well, I've been working on my drive, right? Like, but risk management is really tricky and it's usually emotional. Professionals don't typically lose a lot of money. So what's the reason risk management is emotional is because you're making a lot of money. An example of that is what I discussed at QuantBox this morning. So if you're a subscriber of QuantBox, watch the video. If you're not a subscriber, it's on the YouTube channel. YouTube.com/oops, yeah, I had it there, I had it, it was right there, at it was right there, at QuantBox, okay. In an hour or so, I discuss it here. Okay. It's not knowing what to do, or let's say it's a very big decision, and it might require multiple smaller decisions of what to do when you're making a boatload of money. Professionals don't lose money. I mean, it's not really the concern. You're not afraid. That's a very much a sort of when you're still an amateur, and everybody starts there, by the way, so I'm not playing that down. But in the beginning, you're always worried about money, and you think risk management is that. So, the foolish thing is people say, well, then I'll keep my stops close, so I won't lose very much when I'm wrong. It's the total wrong thing, of course, but that's why most people lose. Right? But nonetheless, professionals don't worry about losing money. They're professionals. They generally don't lose money. It's what do you do with all the profits that you have? That's a big deal, and that's where risk management comes in. And so anyways, I discussed that today here. And this will be available, I guess, in 2 minutes, so you can watch that, guys, if you're interested. But going back, you don't need to know any technicals. You don't need to know any fundamentals. Okay, I suggest you master one and then master the other. But randomly trading, we all should know, will not lead you to success. So the sooner you buy into that understanding, the faster you get to the next level. You have to kill the old you. Right? Like an Oedipus complex. You want to marry your mother and kill your father. Okay? You got to kill the old trader, the trader you used to be, and for some reason cling on to it. Then the next thing is you got to focus on your master, the master trader you want to become. And I literally did this in my own life. I documented it all in my book. But now you get to this point where if you're going to do things technically, you have to learn price action. And the real mastery is not the sword, but the strategist. It's your mind. It's your soul. You must be wise and patient and disciplined. I want you to focus on that. Now, most people can't do it. Seriously. Most people just can't do it. Or at least they won't do it. So I don't know if this appeals to you, this speech that I'm giving you, this coaching that I'm providing you. Most people just won't do it. And that's why they fail. Yeah, it's hard. It's very hard. But the thing is, some people are put off by a speech like this, and others are motivated. They're like, hit me with it. This is what I want. This is what I need. Yeah. It's very hard, right, Maida? Oh my gosh. Even 20 years later, it's hard. It never gets easy. In fact, it probably gets more difficult. If you can't handle a mini lot, you're not going to handle $1 billion very well either. So you might as well start now, but it's all here. It's the master. If you can't learn karate by doing 1 million punches into a mirror, instead you want to get to yellow belt as fast as possible. When do I get my black belt? When do I get my black belt? How do I get my black belt faster? You're not ever going to become a master. A master doesn't think that way. What do you mean faster? Put in the time. When you talk about finance, there is no faster. The person that wants to get rich quicker ends up poor. It's a time-honored truth. Humanity knows this. I read books that are thousands of years old, and they know everything we know today. And so to see people like want to get rich quick, 2,000 years ago, those were the gullibles that were mired in poverty their whole life and probably raised people to become poor and stay poor. 2,000 years later, their lineage is probably still poor, but for 2,000 years, everyone was trying to get rich quick. It's dumb. How do you quickly become a master? It's so silly. You should instead focus on being at peace, or even enjoy the process of becoming a master, with the idea that you can never become a master. It's part of the void. To understand the void is to not know the void. To become a master is to recognize you'll never become a master, but you're in a process of mastery. So, let me get back to the penny. You flip a coin. It says for the next 90 days, you can only do risk-on trades. And if it falls for 90 days and you never get a trade, the fact that you had the patience and discipline to not trade will make you a master. Now, on the flip side, if the market conditions become conducive to your risk-on bias, and all you did was buy higher lows, you will become profitable. But was it you? No, it wasn't you. It wasn't your genius. You're not better than everyone else. You flipped a penny. It was random. It landed on the back of your hand and it said risk on. It had nothing to do with you. You simply had the patience and discipline to execute a risk-on technical trade, like buying a higher low. And Fibonacci has nothing to do with it. You can change your settings. It'll have the same outcome. There's no magic in the math. That's for fools. That's some guy selling a training course to you to make it look magic. And then if you only knew the magic, then you'd have the desirable outcome. No, that's silly. Can you do something like that? Can you only buy for 90 days? So in a risk-on situation, you're right. And QuantBox tells you this, by the way. QuantBox does this on 3 time frames. But you might know in a situation where you only buy euro dollar, you only buy pound dollar, you only buy Aussie dollar. Okay, great. There's 3. You understand? There's 3 possibilities. Which one's good? I don't know. That's your job. Do you understand that? You made the choice to only buy higher lows. So now you can go through all 3 of those. Is this a higher low? You're like the ugly duckling. Are you my mother? Are you my mother? Are you my mother? It's the same thing. Are you a higher low? No. Are you a higher low? No. Are you a higher low? No. Are you a higher low? Yes. Buy. You have to be good with rejection. Have you ever been a salesperson? I called the vice president of American Express every day for something like 45 days in a row when I was working for the nonprofit in the 90s. Every day, 45 days in a row. Leaving a voicemail on her voicemail in the corporate voicemail. And she's like, okay. She calls me back on like the 47th day. She's like, okay, I have time. Let's schedule this meeting. Come on in. Tell me what you need to tell me. Cool. So I get there and I do my presentation why American Express should participate in our nonprofit organization. And she listened to the whole thing. And when she was done, she's like, thank you for sharing. The answer is no. However, when do you graduate? I would like to hire you. Vice President of American Express. I'm like, I don't know, like in 2 years, right? Yeah. Can you leave a voicemail with no response 45 days in a row without getting angry or upset or pissy? We have to be at peace. What is the focus? Leaving a wonderful voicemail, a pleasant voicemail every day until she calls me back. Sort of like, what's my intent on, let's say, euro dollar if I'm risk on? Every day I will wait for a higher low. If I don't get one today, it's okay. If I don't get one tomorrow, that's okay. If I have to wait 45 days, that's okay. Okay? It's okay. Don't you have to trade every day to be a success? No. Your focus, everybody here should be listening to this. Your focus should not be making money. Your focus is developing patience and discipline. Don't switch technical indicators. You're like, well, if RSI doesn't work, then I'll use stochastics. If that doesn't work, I'll use CCI. No. Got to get your focus on patience and discipline. That's what you need to be working on. And you know what? 20 years from now, you'll still be working on it. Why? Because you're on a path of mastery. Okay? Do you know, when you get your degree from Harvard, do you know what they tell you? Welcome to the Society of Educated Persons. Now, they say, you're educated enough to learn. That at that point of getting a Harvard degree, you now know nothing. But you're capable of learning whatever you want. And what Harvard says is the truth. Now that you're educated enough to learn, you can learn the truth. What truth? Well, what do you want to know? You're capable now. And up until then, you're not capable, and the Harvard degree only makes you capable. Veritas. And it's the truth through knowledge. And I'm trying to share that type of wisdom here, where what is the truth? Are you a buyer or a seller? Well, that depends, Wayne. No, it doesn't. No, it does not depend. No, it does not depend. It doesn't change every 2 days. No, it does not. The truth is your first 20 years of being a trader is focusing on developing patience and discipline to carry out whatever strategy you want. And you can use all 10,000 tools. It doesn't matter to you. Okay? I like MACD. I like stochastic. I spent years with RSI. How come they're not on my charts anymore? I don't need them. I see them. I see them because I understand price action. And if you understand price action, then you understand that those tools are only helping you measure price action. So if I can see it, I don't need the tools because I can see what the tools would tell me because I already see. I'm looking at this and I can draw stochastics. I'm looking at this, I can draw a MACD. So is MACD important? Yes. Are stochastics important? Yes. But is that what you should be focused on, becoming a successful foreign exchange trader? No. No. They're just tools. Doesn't matter. Doesn't matter. You can give me any tool. I should be able to figure it out and use it because I understand price action. To know the one thing is to know 10,000 things. So are you a bull or bear? I'm a bull. Great. Is this a higher low? No. Good. Do nothing. That is the truth. That is the veritas, the truth through knowledge. It is the way. And what I enjoy is some of these books I'm reading, like the book on samurai swordsmanship, is written in 1625. Okay? Marcus Aurelius died in 200 AD, so I think his meditation book is over a 20-something year period, so probably around 180, the year 180 AD. And they're experiencing precisely the same challenges that you face today and that I face today. So why try to figure it out on your own when people struggled with this? See, like Marcus Aurelius, who became emperor of Rome, okay? Well, he had a teacher, Seneca, and Seneca had a teacher, and that person had a teacher, and all the way back to Plato and Socrates. And we can learn. But we can go to the other side of the world and learn the school of thought of mastery, samurai, but the focus of self-control is the unifying thread from two different cultures. Focus and self-control. Patience and discipline. And the understanding that you never get there, so you better enjoy the journey.